Okay, you want to trade Forex? I'll show you how to trade Forex. This is the pound dollar daily chart. What do you see? I mean, from this point onwards, we have, let me make me smaller. It's kind of like a barcode, right? Red, black, white, black, white. But this is where you can make money. Two things the market would do at any time frame. It's either going to trend or it's going to go range bound. When it's trending, it's creating constantly higher highs and higher lows. If it's trending up, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And then when it stops doing that, so when it starts to go sideways, and before it starts to go sideways, and this is the other thing, the distance between the previous high and the new high, that's that gap. And then what's the distance between this high and this high? It's bigger, and then all of a sudden you'll see a new high, but the distance between the previous high and the new high is not that enough. And then when you see towards the further left, you have a high that was there and price is consolidating around there. So look at that. We go to the weekly chart. Weekly chart is in a consistent uptrend. So higher high and a higher low. Look at the gap between this high and this, all the way there. But then the next time when it's trying to go up, it's struggling to go up. So what do we have on the daily chart? I'm going to go to the hourly chart and you'll see something. I hope you do. You'll see these two lines, one on the up, one on the lows of the price. This is not a joke. The market reacts, starts going up and down at those levels. Those robots, those computers, or those traders, that's where, like, think about it. When there's a candle and it closes somewhere and it has a high somewhere, it is there for a reason. Why did the candle close there? Like, this is a strong trend candle. Shouldn't there be a continuation? Why did it stop there? Why was there a high up there? So if you look at this, the high of this candle and the high of this, or if you look at the 4-hour chart, swing high, and it's when the moment you know that it's going sideways, like for example, from this point onwards, I consider GU to be in a sideways market. You want to mark what is the high of the range and what is the low of the range. So at this point, the high of the range was this, and I was kind of creating this relevant point there as well. And then this was the low at that time. So guess what price does? It comes to it, goes back up around those levels. So let's suppose we go to the 1st of June. 1st of June, you have the level. Now you need a confirmation. What do you have? A bearish trend candle at the London Open. You go short here, stop loss over there. Where's your target? The range low, or the day's low, or what happens towards the end of the day, or the next day you get out, right? Today, for example, there's a trend candle. Remember, a trend candle within a range is a reversal candle. You have these two levels to play with. Look at that. I was looking at it today, this morning. First candle at the Frankfurt Open, you already have rejection of these levels. You go short, stop loss up there. This is your target zone. I'll show you gold. Look at this. So gold has been in an uptrend, and then all of a sudden it started going into a trading range. So as soon as it starts going to a trading range, what do? You want to mark that level. You want to mark these two levels. Why this level? Because this is the high of yesterday, and it's in line with this other high as well, and this high. So that's a very good level now. Now you go to the hourly chart. So you have this range to play with, and all of a sudden, so your price is going up and up and up, and then you have this reversal bear candle. Don't call it a fruit. Don't confuse it. Forget fruit. Levels. 5-point stop loss. It's already gone 3R in your favor. I think if you just trade Forex, like, okay, look at Kiwi. Kiwi is in a sideways market. what would happen when price comes to this level? This would happen. So you can trade it on the daily chart on its own, in which case you will just go short here and have stop loss up there, or you can get a better one. So suppose now price is going down. Where is it going to go? We have these levels. Let me put a level there, right? These lines roughly. And then after that, what are the levels? It's this. So go to the hourly chart. Where's it going? It's already at that level. It probably will bounce here. It probably will bounce there. What would it mean? Now it's a Friday, so we probably won't. But if it came around here and there was a trading day available tomorrow, there would be something here. So if this market will most probably close around here, and then on Monday we will probably see either a breakout or a reversal. So that's only, so at this point there will be one situation. Is it going to be a, is there going to be a breakout, or is there going to be a reversal? So there you go. That's that. Australian dollar, same situation, going sideways, very, very sideways. We don't have clear levels, but we don't need to look too much. Over here today we had this highest level. So as the market is kind of developing, for example, you mark these three levels, right? And go to the hourly chart. It has gone above it, right? But when it goes above it, what's the next level for you? Well, you have this level. So I would have marked this one. And after that, if it was going up, then I would have these levels and that level. So for example, you saw it clear one level, but bounced against the next level. You have a very strong wick over there. Combine these two candles, what is it? It's a strong bearish candle. But this one is enough for you. So if you combine the two, it's a pin bar. You go short, it goes down, that's your target. What's next? Look at dollar CAD. Look how it bounced around that level. So what is that level? Dollar CAD is going sideways. The high of the day, the high of the day, the other high of the day, hits it here. Look at that. Bounces. Could you have taken long here? Absolutely. How? Well, there's no particular level here, but right in the morning, we have these two lows, London open. If you don't want to take it, that's fine. Dollar yen, was there an opportunity there? Now dollar yen is in a trading range. We've already marked this, and I'm already long based on this analysis on the daily chart. Stop loss is down here. So if it goes below that, then that means we were proven wrong. Otherwise, it's on its way to go up. So if you go to the weekly chart, what do we have here? We have a bear candle, and if you mark the low of that bear candle, you'll see that this week price did try to break below that, but did not succeed and is going up. So there you go. What else do we have? Euro dollar. This was relatively easy. So you have a sideways market, a trading range, and then in there you have a rejection of that level, and you have a bearish pin bar. Next day that got rejected as well. Price goes up. What's those levels? Let's look at it on the hourly chart. What do you see? First, Frankfurt open candle. It's a bear candle. You go short here, stop loss up there. What? 20 pips, 15 pips, or 16 pips. How much profit do we have? Around 56, 70 pips. This is a very strong method. We need to trade this, and your signals are very easy. A bearish or a bullish trend candle. It's clear. Look, this is outside candle. It's clear. Look at pound dollar. A very clear candle. You go short. Swizzy. Okay. You see lows. See, this means something. Price came down, then went up. Then it went all the way up, came down. What's it doing? Okay. Look at the dollar CAD. Not very strong candle, sideways market, not a problem. This one was much clearer. Gold was the cleanest. If you look at the gold, we know that it's been going up. Now it's going to go sideways. It can't clear the highs. That's why it's going to stay in this range. Goes up to it, comes down. There's an edge in this. Your risk is usually very, very small compared to the move that you have, and it's an informed method. It's not like randomly going on a seed and then hoping that it's going to turn into a big winner. In this, you actually look at levels, and those levels mean something. And you have a concept, you have an idea. So when you made this concept, you had this thought that, okay, these are the levels that probably won't be able to be, the market won't break it. And then you wait for a confirmation, which is this. So now the market has told you that, yes, there is selling going on at these levels. You go short below this, and then you put your stop loss where you think you will be proven wrong. If the market started to go up, and that means it's breaking out. So then we probably have other opportunities. And when it breaks out, you can then take pullbacks to get into a trend. I think anything else is just waste of time. In Forex, it's just the levels.